Welcome to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right, I've got John Vandermosten, Senior Biotechnologist Analyst at Zacks Small Cap Research. All right, welcome to the show. Thanks,
hey, Michael.
John.
Hey, thank you for having me again.
My pleasure. All right, what are the investment ideas that institutional investors and CEOs are talking about now?
A bunch of things, but let me just start off. I was going to start off with a few news items out today, which I always like to do. Walmart's been in the news a lot recently. They announced, or there was an announcement that they may buy a small company called PillPack, and they're an e-commerce company. And there's been a lot of talk about Amazon making a foray into the pharma space,
right?
And Walmart and Amazon are kind of always at odds with each other, so they may make a move here. I don't think it's a done deal. There's just speculation at this point. But PillPack, it's an online pharmacy. They have an interesting video on their website, and you can see how they do it. It's kind of interesting. They send you a box just like Amazon would to your front door, and you open it up and you pull out this little packet, and it has the time and date you're supposed to take your drug. You tear it open, take your pills, and throw it out. And you can monitor everything on your app. So it's kind of interesting. And Walmart also may buy Humana.
Okay.
So that was out a while back as well.
Yeah.
And this is just a further extension of getting combining retail and managed care.
I'm going to go to PillPack website right now.
Sure.
This sounds really cool.
Yeah. Well, it is kind of an interesting concept. And then there was another big tie-up between retail and managed care between CVS and Aetna. Mm-hmm. So it's been kind of interesting the last several months because there's been several attempts for horizontal mergers in the managed care space, and they were all kicked back by the government. So now they're looking at these vertical mergers, between retail and the managed care space. So and CVS and Aetna is just another example of that. Now Walmart's trying to potentially do the same thing with Humana. And what this could mean is there might be in the stores there may be clinics, so you can get your health care while you're doing your shopping.
This PillPack private?
I believe so. Yeah, I
think
think
on the website says they're public. Okay.
I just took a quick look at it. I didn't find a ticker symbol on them, but it is an interesting concept. I think they're backed by private equity, but there may be more information there. But just an interesting idea that I just saw today, and it's just the further evolution of e-commerce and existing brick and mortar.
I like it a lot. As a matter of fact, I got a lot of people that I know would like it too, because you can't imagine how many people who are elderly this would be perfect.
It makes it easy.
It would make
You don't have to forget.
No. This is good. I'm going to send this over to my girlfriend. She'll pass it around. You'll never know. Stock will go up.
Sign it up right now. So, but I didn't mean to jump in front of you on the topic that we're going to talk about, which was a healthcare panel. So we put on a healthcare panel last month and had some great participants, CEOs, and institutional investors there. They were from all different parts of the healthcare continuum, from real estate to the debt markets to equity and buyout spaces. And we were all talking about just some of the trends and what people are seeing out there in terms of investment trends and opportunities. And one of the first areas, which has been a big deal, is transparency. And the thing is, you don't know what you're going to pay for your healthcare services or pharmaceuticals, not until after you get them. And the pricing is not transparent. You can't figure out what's going on. So there are many new small companies and startups out there that are trying to make inroads into this. And so we bandied it.
I've had one on the show a couple of times, and that was a big deal. No transparency. How do we? Yeah. So please go ahead.
Yeah,
you're right. It's a big deal.
Yeah, there's a lot of small companies out there, and I think with the increase in high deductible healthcare plans, people are more attentive to what the costs are. Before, you go back 20, 30 years, you just paid a deductible, $10, and you get, the insurance company takes care of the rest. But now, when you have $5,000 deductibles, you really have to pay attention to what the costs are.
You have to hire a consultant to unwind this stuff.
Exactly.
I mean it.
Well, Well, actually, there's another company, and their CEO was on our panel that actually does that. They're like a consultant for figuring out your healthcare bills, and it's a small company called Fresh Bennies. Very interesting concept, but some of the other names that we discussed and talked about in the panel in this transparency space: Castlight Health, ticker symbol CSLT, Healthcare Blue Book, which is private, I believe. United Healthcare, everybody knows about these guys, and obviously their product is very, very small portion of that immense company. And then another one called Amino, which is a San Francisco-based company that has a healthcare savings account interface attached to the app that they work on.
Okay, so where does the money come from on the savings account? Is it automatic deduction from your payroll or something like that?
I believe
like
so,
a
right.
Christmas club account?
So they combine your healthcare savings account and the app, and you can just pay for the
save up for the deductible when it hits.
Exactly,
Okay,
exactly, and it just comes right out of there.
I'm looking at CSLT right now. Yeah, about 363, went from 345 to 363. Just because you mentioned it on the show, huh? Right? No, just kidding. Go ahead.
My words can move markets.
Yes, sir. That's happened before.
Perhaps. Well, another area that we talked about, which is a little bit different, but also quite interesting, and you don't hear about it a lot, but contract research organizations. Now, these guys kind of hide in the background. When a pharma company or small biotech company wants to develop a drug, they don't hire all the people who run all the clinical trials to do it, because that wouldn't really be efficient. They actually outsource it to another group called a contract research organization. So, these guys do a lot of different things, from managing the trial, analyzing data, and preparing a candidate for regulatory approval. And all of,
Can I slow down and ask you a couple questions about this? And I want to go back over on the next segment, some of these companies that you mentioned, and we can start talking about them. The CROs. First thing that comes to my mind, and this is where you can clear it up, is how do you know they're not paid for by big pharma to slant the result? Because that's the biggest thing. What kind of qualification? First thing comes to my mind, how do I know that they're not paid to put the good housekeeping stamp of approval on this deal?
Right. Well, so the companies that sponsor the trials work with the FDA very closely to come up with a trial protocol and the way it has to be set up so that it satisfies all the requirements. And the CROs, they don't necessarily have a iron in the fire here. I mean, they're going to get paid up front no matter what. So
But who pays them?
The pharma companies and the biotech companies.
Okay, that's what I'm saying. How do you know?
Well, right. I mean, obviously, anyone you pay is going to have some kind of desire to see you succeed.
I just don't think I'm coming back next week. I don't like the way it looks.
But the FDA as regulator is going to monitor the process to some degree. So
that's a big hurdle to overcome. No, yes, Bayer paid me, but it's good. Trust me.
Sure. Well, I mean, it's either that or they bring it in house to do it. So,
okay.
But the whole process is very heavily monitored by the FDA, and when you come up with a way to design a trial, many times it's a blinded trial, so you don't know which patient received the drug and which received the placebo.
They have processes in place to make sure that none of that happens, is what I'm hearing.
That's what they do, yeah.
All right, let's take a break, and we're going to be right back on the other side of this commercial break with John Vandermosten, Senior Biotechnology Analyst, Zacks Small Cap Research, and we're going to talk about all of these topics we just spoke about more in depth on the other side of this break. We'll be right back. Listening to CEO Money, segment brought to you by Zacks Small Cap Research. We'll be right back. Welcome back to CEO Money. I'm Michael Yorba, your host. All right, we're talking to Senior Biotechnology Analyst at Zacks Small Cap Research. All right, John Vandermosten. All right, John, when we were on break, we were talking about a lot of things. You really made me laugh. I'll save that for later. But first, the CROs. You're going to run some names down before so people can know where to look, right?
Yeah. And again, there's a lot of trends that are driving these guys, such as growth in China of clinical trials and just more clinical trials being run here in the U.S. And some of the public companies that are doing this is IQVIA, ticker symbol IQV, Charles River Labs, ticker symbol CRL, Syneos Health, ticker symbol SYNH, and PRA Health Sciences, PRAH. And I just want to provide a few names for our listeners if they're interested in this space, because I think that for those individuals who like biotechnology and think that there's a big future ahead for them, but they're a little bit hesitant in terms of the risk-reward profile of those names, they can get that same exposure here, I think, with CROs who are closely tied to clinical trial growth, with these names. And they're paid up front, so there's a little less risk there than there is maybe with some of the drug developers.
Okay. All right. Pharmaceuticals, you're talking about stats. What's going on in the industry sectors?
Yeah. So, another thing we talked about on the panel was just the trends in pharma. And I actually looked up a few things after the panel to check and see what the trends have been in some of the bigger names. So I guess, if we could interact with the audience, I'd ask them to guess what these are. So first of all,
it's coming next. I'm telling you.
So Pfizer's revenues in 2017, were they? What do you think they were year over year in 2017?
I couldn't tell you.
They down about 0.5%.
Ooh.
Amgen down 0.6%. These are healthcare is a growing space, right? And these guys are down. And then Gilead down 14% in 2017.
Why? Why the contraction?
And I think there have been a lot of areas, like Alzheimer's is one where these companies have pulled back and a lot of failed trials. And I think Gilead, although I do not follow it directly, I believe that's related to the Hep C. That was a great growth area for them, and now we're kind of on the other side of that. So these guys need to get back to growth, right?
Right.
And how are they going to do that?
Find new companies to buy.
That's what we think. And if you combine that with the tax reform that took place late last year, which is going to reduce the corporate tax rate and allow for repatriation of cash, I think that provides a nice big fat pot of money for them to go out and buy smaller companies that can get their top line back into positive territory.
I agree. And under careful stewardship of your guidance, I'm sure they're going to find a lot better ways to increase the bottom line for their shareholders, let alone maybe even bring some new stuff out. But you mentioned something that just had me laughing over the break. You said, that a lot of these drugs that you can only get by prescription are now going to start to be moving over the counter. And, sooner than later, you'll probably be seeing Viagra in cereal boxes. Now that a new kind of Lucky Charms. Right?
That's what we were thinking an extra Lucky Charms in Lucky Charms
Instead of 5, you get 6
for over the counter Viagra.
Really? Do you think they could let? I mean, I think that would be a big seller if General Mills decided to put Viagra in cereal for men. It would work as long as they keep the kids out.
I think so too. Honey, would you go pick me up a box of cereal?
Should come home with a case.
Exactly.
Okay. All right. Mobile apps.
Yeah. So this is one of the areas that I think can really help healthcare. We have apps that have transformed ride-hailing. I mean, you think about the ease today with which you can get a taxi ride. You can see where exactly the guy is, and you know when he's going to pick him up. You know if he's a good driver or not. And a whole host of other things. And so, can we apply this to apps? So I was looking around on the internet for some examples of this and found an interesting company that I think they're only focused up in the Northeast, but it's called Urgent Medical Access, UMA. I believe it's a private company. But basically what you do is you put in your location, just like you would with Uber, and you get a list of physicians in the specialty you want. You see a rating next to their name, and they also have an appointment time you can click on. And I think it's on demand. I think you can do it very much the same day.
Wow. Okay. So do I need UMA in my app search or Urgent Medical Access?
Yeah, I think the name of the company is Urgent Medical Access. And again, we do not cover this at Zacks.
Okay.
And I believe it's private. We're not promoting it or anything. We just I think it's an interesting technology that is where we need to go in the space to get transparency, faster, easier healthcare services, and a whole host of other things. And one of the things I like most about Uber is that when you're done, when you're finished, you just walk out. You don't have to fumble in your wallet to pull out some bills or slide your card.
Yeah.
You just get out. So I think if they can add that to this app as well, I mean, it just makes it so much easier because every time you're at the hospital or the doctor's office, you pay and leave, and it's just another hassle.
Got it. All right. We got about a minute left before we go. Any parting thoughts before we tune out for today on this one?
No, I mean, I think it was a great panel with, a lot of great ideas, and, contract research organizations is an area we don't hear about a lot. So I thought I'd bring that to the listeners. And also I wanted to remind everybody, we do not cover any of the companies that we spoke about today. It's just some of the ideas that were brought up in this very interesting panel we had last month.
All right. Now I know you've piqued some interest, the Lucky Charms and all. How does our audience reach out to know more about what we spoke about today and more about what you do that you don't talk about on the air?
Well, I think we're going to put something on the WFN website for what we talked about today. Mm-hmm. And if you're interested in hearing about Zacks, please go to scr.zacks.com, and you'll find the research from all of our analysts on that page.
Perfect. Thanks, John.
You're welcome.
All right. John Vandermosten, Senior Biotechnology Analyst, Zacks Small Cap Research, scr.zacks.com.